Hello guys, welcome back to my channel. Today I'd like to speak about Amazon. Last week they had earnings report and the stock is currently at all-time high. The price is roughly $273. And just because the stock already forms the second largest position in my portfolio, so I pay the particular attention to the earnings presentation, to the earnings call specifically, and I'd like to share my thoughts about it and just to guide you to what I paid attention to, which for me seems particularly important. So this is the first quarter results here. The company announced net sales increased by 17% compared with the first quarter 2025. This is the total net sales, but what I wanted to pay attention to, and I think the majority of investors in Amazon were looking at, is Amazon Web Services growth. And the management highlighted here that AWS segment sales increased 28% year over year to 37.6 billion. Why I want to pay attention to this particular part? Even though this business segment does not form yet the majority of the sales, it's you can see marked orange. It's a very important segment to look at, and let me explain why. So this image I asked to generate Google Gemini to split the revenue by the segment, and I took last 5 years, and you can see main segments, which are online stores, marketplace, AWS, advertising, subscriptions, and physical stores, and others. And for those who might be not very familiar with Amazon business, for majority of people, Amazon still represents online stores, like because people see the ones with the Amazon labels that still Amazon is mainly delivering the stuff from the shops to people. But I think Amazon now is transforming to a totally different field. To visualize the Amazon's evolution, we must look at net sales by source. While Amazon's online stores still bring in the most revenue, yes, so the stores still form 1/3 of the whole revenue now. Their share of the total pie is shrinking as high growth, high margin segments like Amazon Web Services, Marketplace, and advertising take over. And let's go through each segment. So the shift to services. You can see that in 2021, the stores were forming nearly half of the revenue, 47%. And in 2025, it shrinked to 37.7%. So it means that other segments, business segments, took over this part of revenue. The power of marketplace. Third-party seller services now account for over 25% of total revenue. Now let's move to advertising, which is called the silent giant here. Advertising is Amazon's fastest growing segment by percentage. It has grown from 6.6% to over 9% of the total revenue in just 4 years. Because advertising has extremely high margins, this segment contributes disproportionately to Amazon's bottom line profit. And we can see here how it's been growing from year to year. Let's move to the AWS segment. And it says that AWS continues to expand its territory, now making up to 17.6% of total revenue. Even though we mentioned here just 4 segments of the that form the revenue of the business, we have few more like subscriptions, which is here, also forms around 7%, but it's been stagnant more or less, being within the same level. And also they've got physical stores, which form the minor part of the revenue. And here is my focus. I want to pay particular attention to the AWS growth, and let's move on to this is the earnings call transcript. It's quite long. I've just highlighted the most important information that I found for me, and that's coming from the Andy Jassy, from the CEO of the company. And let's start with this one. Starting with AWS, growth continued to accelerate, up 28% year over year, the fastest growth rate in 15 quarters, up $2 billion quarter over quarter. US is now a $150 billion annualized revenue run rate business. It's very unusual for a business to grow this fast on a base this large. We've never seen a technology grow as rapidly as AI. The Amazon is already a leader, and companies continue to choose AWS for AI. And to put our growth in perspective, 3 years after AWS launched, it had a $58 million of revenue run rate. In the first 3 years of this AI wave, AWS AI revenue run rate is over $15 billion, nearly 260 times larger. And this is the key moment why I decided to make this video about Amazon, even though the earnings were last week. If our chips business was a standalone business and sold chips produced this year to AWS and other third parties as other leading chip companies do, our annual revenue run rate would be $50 billion. As best as we can tell, our custom silicon business is now one of the top 3 data center chip businesses in the world. The speed at which we've gotten here is extraordinary, and we have momentum. So for me, this statement says a lot. This is when you can see the tendency of the business when it's going from the online store to the AI story. Now, this is something that I wanted to show, and this is probably the main concern from the bears of the Amazon, is that their cash flow is going slowly but steadily to the negative zone for the free cash flow, just because the company has enormous capex. But we will see now from the statements of the CEO and CFO that this capex is well justified. Let's actually see what they say. Finally, we continue to be confident in the long-term capex investments we are making. Of the AWS capex we intend to spend in 2026, much of which will be installed in future years. We have high confidence this will be monetized well, as we already have customer commitments for a substantial portion of it. The management of such a company is fully aware of where they are spending money to and why they are spending this money to. So I would personally trust to the management at this point, and I actually do. I put my money on it, and let's see what they say more about it. Now, turning to total company capital expenditures. So this is the statement from CFO. Our cash capex was 43.2 billion in quarter 1. This primarily relates to AWS and generative AI, as we invest to support strong customer demand. We will continue to make significant investments, especially in AI, as we believe it to be a massive opportunity with the potential to drive long-term revenue and free cash flow. So basically, I just wanted to show from the two main managers of the company that they have answers to their capex. They fully understand how much and why they spend it. They see enormous opportunity. They also see the significant demand from the customers, and that's why they are going full in now in the AI story, widening their portfolio in the data centers and the cloud business. So coming back to this image, you can see how well diversified the company is, that there are so many business segments. And if we go back to the Amazon, the first quarter results, you can see that they specify, they highlight what they actually achieved during the quarter, and they mention each and every activity they made, what is the progress in this and that, and it's quite a big list of what they did. But let's move to the financial guidance, which is probably the most important part, because the company can do this and that, but if there is no any financial result, it means they are doing it not efficiently. So the second quarter 2026 guidance. So they expect that net sales will be between 194 and 199 billion dollars, or to grow between 16 and 19% compared with the second quarter 2025. In the first quarter they grew 17%. Operating income is expected to be between 20 billion and 24 billion dollars, compared with the 19.2 billion in second quarter. To me, when I see a company which has almost $3 trillion of capitalization, and it grows with such a pace, and the business is so diversified, I want to be a part of it. And also, by the way, just yesterday the company announced that they also open logistics network to all businesses. And they say that Amazon launched Amazon Supply Chain Services, a platform that allows businesses to access freight, distribution, fulfillment, and package shipping via one system. Even if you don't sell on Amazon's marketplace today, you can take advantage of Amazon's logistical network. So here we go. On top of what we have here, they are launching another business. Basically, the only online purchases that I make through Amazon, and the delivery they make is amazing in comparison with other logistic companies. And I always thought, why don't they use their facilities for the other companies? And here we go. This idea has been realized, and I'm happy to read about it. And yeah, that's it. To be honest, I'm very excited to go through this earnings call description, and I really liked everything I read about it. I like the numbers, I like the guidance, I liked that they are moving into the right direction, they are within the trend. And my main thesis was here to show that the Amazon is moving from the perception that it's online store business. No, now it forms a huge part of the cloud and data centers businesses, and I'm happy to have such a position. And that's it. That's all from me. That's all I wanted to share with you for today. I hope this information was useful for you. If it was, please hit the like button and subscribe to my channel if you still did not do so. And I'll see you in the next video. Goodbye.